Welcome to the Stock Market Morning Prep video for Wednesday, September 3rd. Hope everybody in the States enjoyed their long weekend, Labor Day weekend that is. Back to the markets. I'm very excited here that we are finally, summer's over and we should be getting about our business here in the marketplace. I would suspect continued slow grind higher in the marketplace, at least for this week. Markets are relentless to the upside. We did get a little bit of weakness yesterday, and I've been watching the markets on Friday. It's been nothing but one-sided. And just to give you a quick example, this morning Ukraine had mention of a ceasefire with Russia, and Russia actually denied that, but the markets jumped up in the pre-market session, and the ES hit 2011, and Russia denied the claim. But when there's fighting going on and there's really a big conflict, the market still just kind of pushes it off to the side. So we definitely have a one-sided market, which again is not a good, healthy thing to do. However, we have to trade what we're dealt with here. So the markets continue to grind higher. I think we're up now, God knows, maybe 13 out of 15 days, or pretty much close to a full trading month that we've been up and literally vertical. We did hit our extensions. I'll show that to you as well. I'm looking at the builders, the home construction. They're looking really, really good here. They're starting to base coming off their lows. I'm going to show that to you. I'm going to show you a couple of them, and you'll see the same pattern is the same. What else? Crude oil. Crude oil looks really interesting here. 92.5 in the future is actually a very big support. It's tested that twice already, now bounced off it again. And the reason for the weakness is why? Is what do you see in front of you is the dollar index, the DX. We showed you this little move here, this descending triangle. We broke back out of it, and what I did was I put some extensions here. Now we're really stretched, getting up to that 2618 extension on the Fibonacci retracement. So can it move higher? Absolutely. Now, is this something to come? Usually the dollar index is a safe haven, park your money type thing, weather the storm. Well, if this is something that's to come, then this is interesting here, because the dollar index is ripping to the upside with no end in sight. Now, bonds had actually rolled over a little bit, but this is the spot now you want to be watching, not to get in at the moment, but get a little bit of a base and then have bonds start to move higher again. But so let me show you bonds real quick. Here's the 30-year. Okay, now you can trade that as the TLT as well. But this is something here that's interesting. Now back to the 1272 extension. If you recall, we picked out a head and shoulders, inverted head and shoulders pattern way back here. And we had our extensions, and extensions were met, the 1272 and the 1618, and I think we called it right around here, right up in this area here, where we had the left shoulder here, head, right shoulder, slanted neckline, and we hit our extensions. Actually, we exceeded our extensions, and now starting to roll over. Well, this is getting interesting again. You don't want to just go out and catch a falling knife here, as you can see. We have 3, actually 4 down days. You want to let it base a little bit and then start to break out of that base before you get involved. So no need to touch it here, but we could see another big push to the upside. So let's see where this thing starts to settle in. Now, before we get into the indexes, I'm just going to show you indexes because it's been kind of quiet. But stocks above the 50-day moving average have not shown any type of strength. The McClellan oscillators is not officially overbought yet, so we still have some room to the upside. My plan here is that I think that we grind high going into this week, going into Friday's job numbers. There are a lot of economic data that's coming out this week, so we want to pay close attention to what the market reacts to the data, not what the really data is. It's how the markets react to it. So let's keep an eye on that as well. And I'd like to see the ES really push higher and get the McClellan overbought. Once the McClellan is overbought, then we could start looking to see if this market actually has additional legs or starts to roll over. Okay, and if that time, as long as we get a trigger, then we could start fading the market. But you do not want to do that at this time, because of the fact is we have nothing but buying. There's not a seller in sight. And literally after that move low, we had a 5% move lower in 5 days, and we're up now, I think, over 6.5% in 15 trading days vertical. So buyers of dips are out there. They continue to be out there in full force. So you got to really understand how this market is working. So the last thing you want to do is short anything. But the last thing you want to do is actually hold anything. At least me, I'm not looking for that overnight risk at all, unless you're hedged, because anything could happen. And to me, this is a very scary time where the markets are so one-sided. I mean, how much more can this market continue to go without someone saying, my gosh, this is getting a little crazy here. And we're at 2,000. I definitely think we can close higher at the end of the year, but not without a decent pullback. How does that happen? However, things do happen, and unfortunately, that's what we're dealt with. So, stocks aren't really moving except a selective handful, in certain sectors. So, that's what we have to pay attention to. We have to trade the best quality setups that we possibly can. All right, so let's go right into go into the ES. So if you see the ES here, you can see we've met our target. I pointed out the inverted head and shoulders also in the ES on the hourly chart. We've hit our target and have exceeded our target. And here's the daily chart here of that inverted head and shoulders that we pointed out weeks ago. 2006 was the 1272 extension. Here's our target, and I mentioned, if you recall, I would imagine that would just go right to that 2006, since we're only 6 points away from our 2000. That's going to be those stops that are going to get elected. And I think today, now that Ukraine has helped out, saying that they want a ceasefire, Russia denies it, and we're still up 7.5 handles. So, again, low volume continuation. So let's just be really cautious here of how we're going to play this. I would not be looking to short the market at this time. We need some additional evidence. Okay, diamonds. Here is diamonds here, just catching up. This is one of the weaker ones, and this is one of the followers. This is one of the weaker ones here. And also the IWMs too, which I'll show you in a moment. But you have the diamonds here at its previous high, and let's see if we can break up higher here. Now we got the 1272 extension up in this area here, so this will be the first target area if we decide to break higher from here. Okay, transportation sector, again, out of control. I mean, if you look back, you can see, this is just totally crazy. And this is what most of the charts are looking like. This has been on a straight uptrend pretty much all of 2014, all of 2013, and pretty much latter part of 2012. And it's understandable when the markets are good and healthy, but when you have the Fed just pumping liquidity into the market and really artificially propping the market up, and I just, look, I understand about oil, how oil is, a big factor, and it hits their bottom line. So when you have weaker oil, I get all of that, but when you just, when you just continue to move higher, this is where you have to be careful. So we had 4 or 5 small little down days, and one big massive pop higher again. So keep an eye on this. 1272 comes into play here, but remember our repetitive pattern. Every time we hit new highs, it sold off. Hit new highs, we sold off. And then again, same thing up in these areas here. Once we hit new highs, we sold off. We hit new highs, sold off. And again, the same. So let's see if it does that again today, tomorrow. But I think that your next area would be that 1272 extension, which would coincide nicely with the upper trend line area here of resistance. Okay, so let's keep an eye on the transports. Good gauge of the economy. And here's the IWM. Here's the other lagger, which is one of our leaders lagging. That's not a good sign as well. But again, it just seems that the markets have ignored all market divergence, all indicators, overboard. Stocks that are not moving, it just really defies all gravity. So again, you can't fight it. Leave it alone. If you're uncomfortable getting long up in here, where I personally wouldn't, I'm just looking to day trade, then you know what, take a step back and wait for the market to really realign itself for you in your risk tolerance. And then lastly is the Qs. What can you say? Qs straight up out of the, I think we only had one down day in the Qs. And we're coming into some major extensions here, so keep an eye on the Qs as well. And I'm looking for a sign of any type of weakness here at these areas here. These are all-time highs. Again, we've gotten up to all-time highs in 15 trading days. right off the lows, vertical. So at one point, guys, you're going to see some weakness again come into the marketplace. Market just cannot go straight up as well as straight down. But when you have markets like this that are just in euphoria, there's always one shock event to really stop the market. We're coming into September as well. September is known to be notorious, but you know what? You have this euphoria buying. I don't see anything stopping this market right now unless we have this conflict that's in the Middle East and Eastern Europe really start to escalate. And you listen to the news every day, and it's just getting worse and worse and worse, and the markets really don't care. So just keep an eye on things. Remember the home builders, guys. Keep an eye on the home builders, the Pulte Homes, the PHM, the TOL, the LENs. USG is another one, which is the U.S. Gypsum Board that makes the sheetrock. ITB, which is the Home Construction ETF. These are the ones that I'm looking at today, tomorrow, and see if we can get a breakout in these stocks that I just mentioned. Have a great day, everybody. Welcome back. Good to be back, and we'll speak to you tomorrow with a big update. Take care.